There is nothing wrong with renting. In fact, there is a time to rent. However, that time is not now. Do not fret. I'm going to unpack this bold statement in a few moments in this special episode of the Martini Mortgage Podcast. Welcome and thank you for tuning in. My name is Kevin Martini, and I'm not just a host of the Martini Mortgage Podcast. I am also a certified mortgage advisor with the Martini Mortgage Group, which is located in downtown Raleigh, North Carolina. We may have our headquarters in North Carolina. However, myself and my crew help families all over the U.S. create generational wealth with financing real estate. Episode 135 is called 6 Financial Reasons for Homeownership. You could also call this episode 6 Reasons to Buy a Home in Raleigh, or any city in North Carolina, or any city in the U.S. for that matter. Now, let me share. Recently, I was in the grocery store buying my beloved Cocoa Pebbles. Yes, you know the cereal, and yes, it turns milk chocolate. Anywho, I heard someone say, "Excuse me, Mr. Martini." I immediately got excited because I thought my dad was in the cereal aisle of the grocery store with me, but then I realized the chap was talking to me. I responded by saying, "I know I've been in the financial services since the mid-'80s. However, I'm just Kevin. My dad is Mr. Martini." The young man's name was Steven, and he's a younger millennial, and he asked me if he should buy a home now or wait. My response was not yes, not no. It was, it depends. I know what you're thinking. I should have just said, yes, you should. But if I did that, it would be wrong. You see, no one on YouTube, no one on Facebook or Instagram, and no one on a mortgage podcast or any podcast for that matter, and most definitely no mortgage app that can take you to the moon on a rocket can tell you if it is a good or a smart idea for you to buy a home. Homeownership is right for many, but not all. You see, every family I have the privilege to work with is different. There is not a cookie-cutter response to Steven's question. Think about this for just a moment. Getting a mortgage is a big deal. It's a financial instrument just like a stock or a bond that you would buy in your portfolio. You would never buy a stock without making sure it would properly fit into your portfolio, would you? You should not just buy a house because someone says you should. Everyone is different. Listen, if you're looking for someone who just peddles mortgages, then hit the stop button because this is not me. Again, for many, buying a home makes sense. For some, it does not. This is something I can help determine when we first connect together. With an open heart, in order to create generational wealth, one needs to own real estate. If homeownership is right for you, taking action sooner than later could save you tens of thousands of dollars. Now, if buying a home is right for you and your family, then I want to share some of the financial benefits associated with buying a home and getting a mortgage with the Martini Mortgage Group with PCL Financial. In this episode 135 of the Martini Mortgage Podcast, I'm going to share 6 financial reasons to buy a home. Are you ready? Let's start mixing up this cocktail. Number 1 is leverage. Housing is one of the only leveraged investments still available today. Simply put, leverage is the use of borrowed money to increase your return. To illustrate, let us assume that you want to buy a home in Raleigh and that home is priced at, say, $500,000. And you have a 20% saved. For this, that for those that are not quick with math, 20% of 500,000 is 100,000. So let us look at the transaction in detail. You would buy the home for 500,000 and you would put 20% down. That is 100,000, and you would get an epic mortgage rate on your $400,000 mortgage with me, Kevin Martini, your certified mortgage advisor. Now, let us fast forward, say, 1 year. In other words, you own the home and you secured the mortgage and you moved in and lived there for 12 months. For the purpose of conversation, let's assume the home appreciation is 5%. This $500,000 home you purchased just 12 months ago is now worth $525,000. Assuming this is your only asset, your net worth is now $525,000. Now, think about this. Let us say you didn't buy that $500,000 home in Raleigh. And let's assume that you purchased a $100,000 home for cash in Raleigh 12 months ago. Using the same 5% depreciation in the previous example, then your net worth would be $105,000. Make sense so far? Okay, what does this mean? With leverage, you made $20,000 more. Let me share a quote from the Joint Center of Housing Studies at Harvard University on this topic. And I quote, "Homeownership allows households to amplify any appreciation on the value of their home by a leverage factor," end quote. Number 2 of 6 financial reasons of homeownership is crazy simple and so very obvious, but many people miss it. You are paying for housing whether you own or rent. Here's a fact. When you rent, you are paying for a mortgage. You are just paying your landlord's mortgage for them. For the people that were multitasking, let me say it again. When you rent, you are paying for a mortgage. You are just paying your landlord's mortgage for them. I mentioned earlier that there is nothing wrong with renting, and there is a time to rent, and that time is not now, in my opinion. Census data shows that the median monthly rent continues to go up year after year. In fact, since 1988, it has gone up, up, and up. The only way one can escape rising rents is to consider purchasing a home and locking in your monthly housing payment with a fixed rate mortgage payment. I truly believe that homeownership is a much more stable long-term investment. Perhaps your concern is credit score, or that you are self-employed, or maybe it's the down payment required. On the topic of credit score, I think you will be shocked to know that there are some home loan solutions that the Martini Mortgage Group offers families that have experienced a bump and a bruise in the past. I get it. Bad things happen to good people. And the bad things that you have moved past does not need to prevent you from owning a home. Perhaps a limiting belief is that you're self-employed. Many of the families I work with as a certified mortgage advisor are self-employed, and they have a very creative accountant. This week, my business partner and fellow mortgage strategist, Logan Martini, helped a self-employed person to qualify for a mortgage just using his bank statements for the last 24 months. And we did not even look at his tax returns. Another concern is down payment. This is a common misconception in the marketplace that one needs to have a 20% down payment to buy a home. One does not need to make a 20% down payment to secure a home loan. With the Martini Mortgage Group, there are low and no down payment options that we offer. Remember, you are paying for housing whether you rent or own. For me, if I'm paying for something, I want to own it. Please do not let the myths about credit score or down payment or the fact that you're self-employed stop you from exploring your options. I said it earlier. Homeownership is not right for everyone, and it may or may not be right for you. However, you owe it to yourself and your family to see if it is right for you. Let me extend an invitation to you. If you would like to have a confidential conversation with me, I am here. Just go to callwithmartini.com to get access to my schedule and book a time for us to connect. Or if you prefer, just simply call me by dialing 919-238-4934. The third financial benefit is associated with the fact that owning a home is usually a form of forced savings. Let me break this down. Every month when you write the check for your mortgage, you are not only paying interest, you are also paying principal. When you pay principal, you are reducing the amount you owe. Let me illustrate. If you purchased a $500,000 home and you put 20% down, and for example, let's assume for illustration only a 4% rate for a 30-year fixed mortgage, just like the example we talked about earlier when we were discussing that housing is one of the only leverage investments still available today. In this example, your principal and interest would be $1,909.66 a month. Every month when you make your mortgage payment, you are retiring debt every month. In this example, you are making a forced savings deposit of $576.33 a month. In this example, you are making a forced saving deposit of $6,915.96 a year. There may be substantial tax benefits to owning a home, and having a mortgage is the fourth financial reason for home ownership. A unique financial reason to buy a home is if you itemize your taxes, you may be able to deduct the mortgage interest you pay. Assuming you are in a 28% tax bracket, and for illustration only, this would mean that the monthly tax benefit for that $500,000 home that we've been discussing would be $373.33 a month. The annual tax benefit would be $4,479.96. When you rent, there is no tax benefit nor ability to write off your rent on your federal or state taxes. However, do not fret. Your landlord most likely will get the benefits, and I am sure your landlord is thankful for you are participating in their forced savings. Inflation is the fifth financial reason for home ownership and to buy a home. Owning a home is typically a hedge against inflation. Let me define inflation. Inflation is a general increase in prices and a fall in purchasing value of money. At the time of this recording, inflation is at a 40-year all-time high. Housing costs and rents have tended over most periods of time to go up higher than the rate of inflation. And for this reason, owning a home is an attractive proposition because it provides a hedge against inflation. Finally, the sixth financial reason for home ownership is the non-financial benefits of home ownership. I know it is crazy to say that non-financial benefits is a financial benefit, but it is. And sadly, many people overlook the feeling of gratitude, security, pride, and comfort that homeownership offers. When considering to buy a home, you need to have price and cost clarity of the dollars and cents, but you cannot forget to weigh in the non-financial benefits that could truly change your life. Let me wrap up this special episode of the Martini Mortgage Podcast with the 6 Kevin Martini financial reasons for homeownership. Number 1, housing is one of the only leveraged investments still available today. Number 2, when you rent, you are paying for a mortgage. You are just paying for your landlord's mortgage for them. Number 3, owning a home is usually a form of forced savings. Number 4, there may be substantial tax benefits to owning a home and having a mortgage. Number 5, owning a home is typically a hedge against inflation. And number 6, homeownership provides non-financial benefits. In closing, getting qualified and ultimately approved for the right home loan and getting a mortgage for your home is not like shopping for the lowest price gas for your car. Listen, every company secures the money from the same source, so everyone at the end of the day has the same mortgage rate. However, not everyone provides trusted advice with a secure digital mortgage platform that provides certainty, like the Martini Mortgage Group provides. In addition, our job is not done after closing, since it's our obligation, duty, and responsibility to manage your mortgage for you after closing. Thank you for tuning in to episode 135 of the Martini Mortgage Podcast, which is about the 6 financial reasons for homeownership. Thank you in advance for sharing this episode with someone you care about that may benefit from its content. It is never too soon to explore your homeownership options. It's never too late to explore your homeownership options either. If homeownership is right for you and your family, then know this. The first step is always the loan, not the home. There is never a substitute for having price and cost clarity before you start looking for a home. Get pre-approved before your home search, not just pre-qualified. To a seller, a pre-qualification says you are just ready and willing, whereas a pre-approval from a certified mortgage advisor with the Martini Mortgage Group says you are ready, willing, and able. It also communicates to the seller that you are making a same as cash offer, and that is important to share in any market, especially in a tight real estate market like we are in today. If you want trusted advice with a digital mortgage process that offers a great way with certainty, check out my website by going to www.martinimortgagegroup.com. You can find some real-world information in the Learning Center, and you can also securely apply online or book an appointment with me. Now it's time for the disclaimer. This material has been prepared for marketing purposes only. This is not a loan commitment or guarantee of any kind. Loan approval and rate is dependent upon borrower's credit, collateral, financial history, and program availability at time of origination. Rates and terms are subject to change without notice. The Martini Mortgage Group of PCL Financial is a division of Celebrity Home Loans, NMLS number 227765 with a branch address of 507 North Blunt Street, Raleigh, North Carolina, 27604. You can contact certified mortgage advisor and producing branch manager, Kevin Martini, NMLS 143962, by calling the branch, and the number is 919-238-4934. For a full list of more licensing information, please visit www.nmlsconsumeraccess.org or by visiting www.martinimortgagegroup.com. Equal housing lender.